Nicole Yazbek-Martin is Head of Taxonomy and Natural Capital at Australian Sustainable Finance Institute. Nicole is currently leading the development of the Australian Sustainable Finance Taxonomy, working closely with government and regulators to develop common definitions for sustainable economic activities and investments. Nicole also leads a body of work at ISSB with major finance sector entities to integrate nature considerations into financial capital allocation decisions. Now let's get into the episode with Nicole. Welcome back, Dave and John.
Really good to be back.
Yes, nice to be back, everyone. And I'm looking forward to talk about the difference between Australia and Canada.
Well, thanks for that, Dave. Today we're joined by Nicole Yazbek-Martin, Head of Taxonomy and Natural Capital at Australian Sustainable Finance Institute. Welcome back, Nicole.
Thanks for having me again.
So today we're diving into the lessons from Australia. So we really would like to look at a number of aspects of sustainable finance in Australia and see what lessons Canada and other countries could learn. So on that note, given Australia's progress in sustainable finance taxonomy, what key lessons do you think they could learn from your experience as it develops its own sustainable finance framework?
Thanks, Lysandra. So I think firstly, I was very excited by the announcement. I think it happened at a PRI conference in Toronto last year, just because I know that the work that the Sustainable Finance Action Council and the community writ large have been advocating for it to happen. So it was really great to hear that, the Canadian government will be supporting the private sector to actually get on and develop your green and transition taxonomy. As I said previously, we've been working in close collaboration with you folks for a while, sharing lessons. While we had the good fortune to sort of move ahead, we see Canada in a really strong position. And I say that because the foundation has been set. And when people ask me why the Australian Sustainable Finance Taxonomy process has been by and large successful, hasn't hit major roadblocks that other taxonomies has faced, I always chalk it down to the foundational elements. And I think those are there for Canada. So I'll kind of point them out. The process that the SFAC has taken everybody on board, I think, as Bob often likes to point out, Bob's fan, who sort of drove that piece of work in the SFAC, you had over 90% financial institutions representing over 90% of Canada's financial services sector on board asking for this. There was a broad inclusive consultation process. These are all very, very important foundational elements to getting started. They're not going to ensure success, but without them, you're not even going to get to the starting line. So those elements are already in place. I think the other thing that is in place and will put Canada in good stead to move ahead at pace is a clear methodology of how you're going to go about this. There's upfront, that's transparent. So the work that council did to put out that methodological report to explain pretty upfront and out there what's in, what's out, and the way in which we're going to go about doing this, it almost creates that no surprises, and it creates a bit of a roadmap for what is going to be really complex and technical deep dives into areas that I didn't even know existed before we started this process. So having that kind of guiding North Star with a strong sort of principles on how you're going to develop it is very, very important. And then I think importantly, and I know that Canada's working up what form that will take at the moment, having an independent governance structure that can get on and do the job is crucially important. And, there's a couple of components in that. We won't get into it because I know that you guys did a lot of work thinking about what that independent governance structure could look like to ensure optimal success. So implement that and go with that, because we drew a lot on those recommendations when we set up our own governance structures, and it has definitely stood the test in time. But in terms of things that would surprise us and maybe, looking ahead with excitement, number one, it takes longer than you think, because people, especially if they care, and it's good when they care, it's good when people want to get involved, it's good when you get good consultation and engagement from industry, because that means that they might be using this thing and they're seeing potentially the benefits of how it's going to enable them to access favourable capital. But you've got to take the time to work through issues with stakeholders. So don't think you're going to get it done in 12. Well, if you do, I'll be amazed if you get it done in 12 months, but it takes longer than you think. And be prepared to be surprised by the weirdest things. The nuances, this is the gem of a taxonomy, is it gets down to activity levels and it defines things in the economy. And the littlest thing can actually have quite complex physiological processes, unique dynamics. So just embrace that journey. Those that are involved in the process will learn a lot.
Nicole, we have listeners, I think, in 27 different countries. And so we would be familiar with sort of the richness of the natural resources both countries, Australia, have, and then the Indigenous population. So can you share, how has the Australia taxonomy development process addressed these unique characteristics? And what insights could you offer or suggest to Canada based on your experience in that piece?
Yeah, it's a really great question. We did want to put a flag in the ground in terms of, we do some things, we do them really well. We see this as future comparative and competitive advantage for Australia, and we are going to have a say in defining what the sustainable pathway for these things are. And so mining is a crucial area where Australia, we've put up our hand and we said we're going to have a go at defining green and transition in the mining sector, particularly around the critical minerals that we know are absolutely essential in the transformation of other systems across the economy, the lithium, the copper, etc. But also, our major exports like iron ore. Yes, it's not a critical mineral, but, still is pretty fundamental to modern economies. It is also 12% of global emissions, that one commodity. And so cracking that nut, it's something that we're all going to still need. We need to crack that nut. And it is Australia with our iron ore export base. Do we potentially want to lean into this, right? This is a new area of opportunity for us. So really thinking about our competitive and our comparative advantage, where we can position our existing industries for the growth in a net zero world, and then mirroring that in the taxonomy so that we can start to hopefully attract that favorable green capital inwards. Of course, we're very lucky and endowed with, a lot of wind and a lot of sun, and they operate very nicely together. I'm told, I'm not an energy expert, but I've heard that the wind blows when the sun, is less, and it's quite complementary, which means we can have very high penetration of renewables. And I think that forms a basis to actually unlock other parts of the economy and electrification, etc. So really building off that and pushing the boundaries in terms of what are the potential pathways and opportunities through electrification and other pathways in heavy emitting industries, knowing that we have a decarbonizing grid that is decarbonizing rapidly. I think to the First Nations piece, because that's a really crucial piece and an amazing shared history that we have, and something that I think we both want to embrace, is that we know that net zero, there's no road to net zero that doesn't run through Indigenous lands. And that is true in Australia, and that is true in Canada.
Yeah.
And so we really wanted to start to signal that this is the case, and that going forward, as we transform our economies, we also transform the way in which we do business with First Nations peoples and communities to ensure not only respect and inclusion, free, prior, and informed consent, but form a basis for economic self-determination. So what does partnership look like in this space? The taxonomy cannot solve all of these things. In fact, it's quite a clunky tool, and I won't get into too much technical jargon with your listeners, but you have a technical screening criteria, so your actual economic activity needs to perform under certain thresholds, and then you have to do no significant harm to the environment, and then you have to ensure that you have these what we call minimum social safeguards. That all sounds very unambitious, especially the minimum social safeguards piece, but what it does try to do is ensure that when you're doing businesses, that there's like a basic standard that we're not going to walk past that standard when we are making big investments in the transition. And so we will be the first jurisdiction in the world to embed First Nations rights and cultural heritage protections as a minimum social safeguard into the taxonomy. It is not in and of itself going to lead to economic self-determination, but it's a starting point, and really what we hope is sort of a baseline for businesses to start to build on and think about when they are investing going forward. So probably to your last question around advice to Canada is really think about where you strategically want to position yourselves what are your unique elements, and where do you want that favorable green capital to flow in your economy when you're thinking about kind of priority areas, and working in partnership with First Nations in terms of embedding those expectations as well.
Thank you.
Okay. Australia's made significant progress in integrating nature-related financial disclosures with climate considerations. What advice could you give to other financial institutions looking to do the same?
So, I mean, I think firstly with nature-led financial disclosures, I definitely wouldn't put Australia as a leader. I think there is an openness, and that I would say, an openness from government to explore, an openness from business to say, we need to think about nature. But I do actually all think we're sort of all we're all thinking about what that means and how we can embrace this. And I would say, in the UK, they've actually done a lot of work. Their Green Finance Institute is put out some excellent frameworks to start to think and grapple with opportunities. And we're, again, learning, followers, looking and learning from them as we think about even expanding that taxonomy to other environmental objectives, which is only one small part of this broader thing. I think where Australia has set the foundations to be able to integrate nature over time is through the full embracing of the ISSB standards. So the S1 and the S2, translating that into our ARS, which is the Australian Standard 1 and 2, almost sort of mirroring that with obviously the necessary local content, making those disclosures mandatory. So S1 is mandatory, but S2 is voluntary, but it's there and it's integrated into the regulation. What that enables is that growth and expansion and evolution over time. And so, and I think the last thing I would say is that obviously the Australian government has signalled that it will continue to track these things as they progress, working very closely with the ISSB on this. And so I think what that does is give a forward-looking pathway for financial institutions to say, okay, it's not one thing and then another, and we're not sure where we sit with this stuff, but we know that it's a continuum and we're working at pace to try and make that happen.
Nicole, how has Australia managed the transition challenges for carbon-intensive industries, and what parallels could be drawn for other economies based on the work you guys have?
Yeah. So, I mean, like I've said before, we did have a very unique opportunity and a point in time to get going with the transformation of our energy systems. And I always just want to emphasize that, because sometimes it's a combination of good policy, good luck, and right place, right time. The transformation of the Australian energy system is at the core of the transformation of the economy. You see that in every single pathway, whether it be the IEA or anything else. What you really need to do is decarbonize your energy systems, electrify where you can, and then move down into the harder and harder areas, and then use your creative and very expensive solutions to those hard to abate sectors. So highest value uses of the highest value products, but really for the bulk of the economy, what we really need to do is decarbonize the energy system and electrify everything, right? And so Australia's really kind of played out that playbook. And like I said, it's early government policies and renewable energy targets to help with those new investments that needed to be made anyway in building up our new energy system that started to get that momentum going. And so now what we're seeing now are the gradual benefits that a decarbonized energy system can have, and the flow through that has to the rest of the economy. So the government recently put out our Future Made in Australia agenda, which is really thinking about Australia as in prime position to be making some of these energy intensive refining, smelting, etc. So can we start to move down the chain? We've got the resources, we've got the clean energy. Now we're starting to be in pole position to do things like green aluminium, smelting, etc. And so we're able to start to unpack that opportunity set because of the decarbonized energy system. And that flows through even to our building sector, all the way down. Anything that has its base in the decarbonization of energy at its core, that sort of scope 2 emissions, then enables our green economy to grow. And so what we've done, like I've said, is really look at the taxonomy and look at the opportunities that build on a decarbonized system. So obviously continue to encourage the flow of finance, but people that opportunity set is there, whether we tell them that or not, because it makes economic sense in Australia to invest in those things. But now what we're really looking to do is, you have that decarbonised system as a base. What is the next steps? What are the R&D investments that you need to make? What are the electrification investments that you need to make? All those component parts that we've identified in the taxonomy that will help to transform our manufacturing and industry sector, our heavy industry sector, to the extent that relationship is strong between decarbonised energy and the decarbonisation of those processes.
Very good. Thank you. Next question for you. We've seen both countries face similar challenges with climate-related physical risks like wildfires and floods. How has this influenced Australia's approach to sustainable finance, and what could other countries learn from this? Because we all know there's all sorts of funny weather patterns going on, or issues, we know California, for example, the fires there. So what can you share with us? What happened and what you've learned?
I mean, I think we've all experienced just such devastation in the last couple of years. The 2019 bushfires in Australia, it was extraordinary, and the destruction was just devastating. I would, say that in isolation, except for you guys had the same thing that happened to you, and we've just seen now what's happened in California. And so that has obviously just catalyzed awareness on the ground, of course, and that leads to a broader support from the community that something needs to happen, which is great. But what it has done is just put into sharp focus the reality of financial risk for the first time. And we had the fires, and then we had the floods. And for the first time, we're starting to talk language that we never spoke before, like relocation and reclamation and pooled insurance with government support and differential premiums. It's that necessity, the understanding of that acute risk, that risk is happening now, and the devastation that could flow through to the economy. Particularly, I think we all know this, but, essentially insurance is like the canary in the coal mine, right? It is the glue that holds the financial services system together. And if it becomes unviable, the whole system is flipped on its head. The risk return profile is flipped on its head. In Australia, we have a huge mortgage. Property is our thing here. We love to invest our savings in property. Financial, banks are exposed to it. If you can't get insurance for your house, that system doesn't work. And so what that has done is spur innovation. And I would say, I don't know what that we haven't got the solutions yet, but what it is doing is really that thought process has started about thinking about what those solutions are, and then how sustainable finance can complement that through making visible products and services, etc. But it is going to be more than just things like taxonomies and disclosures. I think it's going to have to come up with creative solutions, blended finance models. But I think now there's a recognition that business as usual is not going to hack it, and we actually need to move forward. I would just say one other thing in terms of a practical example that we're really thinking about in the energy system in particular, and I was having a discussion with one of our sub-sovereigns, our states, similar to your provinces, as they're thinking about the investment in their, a ailing energy system. They're starting to think about microgrids, decentralized systems, because we know that these transmission lines have, under these very high pressure environments with extreme weather, can exacerbate disaster. And so particularly in Australia, which have got very, very big spaces with a lot of, space in between, how do we really think outside the box in terms of what a decentralized distributed energy system looks like? And so we're grappling with actually activity level criteria for that exact thing in the taxonomy right now.
Thank you.
Trying to think you're on mute.
I'd like to move us on to talk about ESG, environmental and social and governance reporting. And it's an interesting topic because I feel as it's approaching some of its maturity, we're also getting a lot of detractors, people questioning, is it of value and whatever. And what I'd like to ask you, if you could share some insights on how Australia has approached the standardization of ESG and what pitfalls others could avoid based on your experience. So
again, I'm just going to be absolutely shameless in saying that we are learning from every pitfall that everybody else has done before us. Maybe that's our secret sauce, is we just wait by other people to make mistakes, and then we go, all right, okay, we can do it better this time. No, I mean, to take a step back, I think that maturing is certainly happening, and I welcome that. There was a discussion at one of the panels at PRI, which I thought was very profound. I think it was a CPD CEO was talking about decision useful information. That what we've done, unfortunately, as every flower bloomed and every framework bloomed and everybody got all excited about this new area and we need information, it was just like more information is better. We need to just collect the stuff. And I think parts of the financial services sector got a bit carried away. But, that has real world impact on businesses whose core business is not to give you every piece of information that you want. It's to actually drive their businesses and make stuff, right? And be part of the economy. And so really thinking about why are we asking for this information, to what outcome. Is this going to be helpful in good decision making, to understand risks, to identify opportunities, to be able to, it's decision useful information that I think we really need to get to the nub of. And I think that does mean a paring back and a focusing on what we need and why we need that information. So that I think is a lesson learned, because we are putting in place the regulatory architecture quite late. And so we don't need to do the full bells and whistles. We can actually get it down to, where's that balance that is actually going to provide the market with the necessary information to make those effective decisions that lead to the long-term stability. Because that's why we're doing this stuff, right? We're not doing this stuff for, we're not hoarders. We're not collecting this information out of our curiosity, right? It's actually all about effective decision-making for long-term stability and capitalization and opportunity identification and pricing of risk. So as we put in place the regulatory architecture in Australia, I think that the regulators have been very mindful of pinpointing what we want. And I think we're very lucky that the TCFD came out as a voluntary standard. It ironed out a lot of its issues and it's refined itself. ISSB has taken that on. And so I think that the S1 standard is a good starting point. And we've got broad scale business support for the adoption of climate related financial disclosures in Australia in that context and setting, because they see it as decision useful and helpful to their businesses. And so what we are doing from a taxonomy to support that, because it's a supporting piece of information when you're doing your forward-looking capital allocations, here's the tool that you can use to help you identify, is that how does this tool complement that information set? And then the guidance that sits around that in terms of ASIC and our corporate and prudential regulators to support, this is how you do it. Quite practical. This is the information sets that you need to do it. It needs to be proportional to the size of your business, et cetera, et cetera. So I think getting to the core of that information, thinking about the data flows, thinking about the practical parts of that, and then start to see what else is needed. So really stripping it back and then building up from there is a sensible and good approach. And I suspect some parts of ESG, especially when they were providing information of, scant data points, secondhand, I think that stuff, I actually hope will fall away and the noise will fall away and we actually get to the essence of what we're trying to do, which is good decision making.
Thank you. Interesting answer.
On a related note, how has the Australian government been involved in pushing sustainable finance initiatives? And do you think this approach could be a good model for other countries looking to do something similar?
Yeah, so I'm always, I guess, reluctant to be like, here's the model and you can use it, because like I try to explain, some of it is luck, some of it just it's a sequence of events and how jurisdictions come to these things. But I would say there was kind of two ways in which the Australian government, not necessarily at the same time, not necessarily in sequence, but the two things ended up coming together to be quite complementary. So the one is in the policy support, which came quite a bit later on sustainable finance, but the starting point was a bit in the doing. So we had some key institutions that were set up around 2012, really were the baseline information. So our Climate Change Authority, which provided really good, robust domestic downscaled scenarios. That is very, very helpful decision, useful information, which has proved to be pretty crucial to the market. They also set in place, very robust sort of greenhouse gas reporting systems. And even though not everybody needed to do it, it was those basic architectural systems that were in place that have helped us as we move forward in sustainable finance to have something to hook criteria onto and to have people to be able to find that information, report on it, and streamline it, all of that. So that was very crucial. That happened, pretty early on. And then you had, a granting agency called ARENA, which was really around kind of seeding an early stage, kind of let every flower bloom. Let's just encourage that innovation. And, to the extent that the government is able to put that incentive in place, but recognizing also that we needed to mainstream it and then let the finance sector take over. And so our Clean Energy Finance Corporation were the early seeder. They, were the first loss. They were, sitting in behind, working with mainstream financial institutions to get those early transactions off the ground. What we like to say, cut the first cookie and then allow the banks to replicate that over and over and over again and the market to take over. And so that system was well in place. And then our sustainable finance architecture came across the top. So our current government that came in 2022, signaled that they would work with industry being the finance sector, on the information architecture that would help get that private capital flowing faster. But like I say, you can have the information architecture, but if you don't have the enabling environment in the real economy underneath, the capital really has nowhere to go. Right. It's necessary, but it's not sufficient to get the capital flowing. So the support from the Australian government to be very clear in its sustainable finance strategy, which they put out 3 pillars, 12 key actions. They then put out a roadmap. This is when we're going to do it, how we're going to do it. And they've been working hand in glove with the financial services sector all the ways, partnering with us on mainly private sector led on the development of the taxonomy, working really closely with business and industry on the climate related disclosures. They'll now be looking at guidance on forward transition planning and thinking about how all of these pieces fit together. And I think that openness and willingness from them to continue to work with people, institutions like ourselves and others on piloting in a voluntary sense, so not rushing to that endpoint, regulating and then seeing what the consequences are, but working under, a voluntary sense with the taxonomy and transition planning, getting that feedback loop going and seeing how all of these pieces fit together and what adjustments need to be made. I think if we can stay the course of what we're currently on, I think we will have a system that is really fit for purpose and gets private capital flowing to where we want it to.
Can I have one last question, Nicole, with you? It's something that we touched when we first spoke prior to arranging this podcast. I'm interested in when we talk about sustainable finance, that historically is, banker talk and, people in your discipline quite understand it. It's completely understood. Is that a common term or understood by businesses of all sizes, or is it really more for the elite organizations? I'm kind of curious how it's permeated throughout the business community in Australia. Has it, or is it just kind of siloed or niched per se?
I mean, I think it started quite niche, and because it's complex and it's necessarily bespoke, and so you need large transactions, single large transactions to make it worth your while, both from a financial institution point of view, who have to put the time and effort into the structuring of these things, and a very patient counterparty who is in many instances the guinea pig, right? So kudos to some of those early corporates that worked with the financial institutions to structure some of those early deals, because it was a slog. And sometimes they got quite a minor discount for it. And so they were doing it for the team, so to speak. But, like I said in the previous episode, I think financial institutions in Australia really saw this as an opportunity and a niche. And so very much embraced the acceleration of the deal making, doing of the deals, right? And they were doing this before the sustainable finance architecture was in place. But, issuance of big corporate green bonds and really socializing those, and then moving very fast and quickly into the space of sustainability linked loans. And, particularly like our agricultural sector, we haven't spoken about that a lot because it is its own unique and interesting beast. really trying to see how we can get agri-green loans out to farmers, just trying to be innovative in that space. It has permeated beyond the elite, so to speak, or those that have the patience, the time, and the massive kind of team of sustainability professionals on both sides to be able to do that. And so part of the work that we're doing, really, it's not about the front end, right? The sustainable finance taxonomy, those that have been doing those early transactions, they already have their own frameworks, right? And they're doing it. They're at the front. But what you want to do, that maturing of the market, is bring everybody along.
Yes.
And so it's almost like we see it as that public good. So, okay, we learn from the front runners. Now let's see how we can develop a framework that many people can pick up, that we can start to socialize across not just institutional banking, but our commercial clients, and retailing it to consumers and SMEs, etc. And that's now the journey that we're going on in Australia.
So you're getting there. I was curious because we have worked with organizations to arrange sustainability linked loan, and they're quite large, operating like $2 billion operating loan. So that's not for a greenhouse corporation that might be 58, like that's not right. So I was kind of curious how fast, because they're interested, like they want to do things and they're quite intrigued, but our system's not mature enough to enable that as yet for that to happen. So I was curious to see how fast that's happening, if it's happening in Australia.
Okay. And that's where the sustainable finance architecture can really help accelerate that, right? Because it's really for those institutions that need something off the shelf, right? And we need to start standardizing that information that helps banks to kind of pull that through into their processes and offer it at a cheaper, efficient rate. That means they can offer it to more people. The size of the transaction can get smaller. So that is just that kind of multiplier effect, and that does take time.
The maturity issue, I guess, it's just fair enough.
Nicole, thank you so much for another great episode. To end off today's episode, what is the biggest takeaway for our listeners?
So I think probably what we've been talking about a lot is that there is no one silver bullet.
Yeah.
It is a little bit of everything, everywhere, maybe not all at once, at different paces. So, I think, but it is a holistic approach that we need to keep working on from all different sides to make this happen.
Thanks for that. John, what's your biggest takeaway?
I was just intrigued with your no silver bullet, because there's a recurring theme in this podcast is there aren't silver bullets, there's silver buckshot. My takeaway is a bit on the boring side, but I think so important. And it was when we were talking about particularly ESG reporting, and you were talking about proportionality. And I've got involved in quite a lot of assurance of ESG reports, and the amount of data and information that is collected that you have to verify and assure for what is probably not going to be a major benefit is alarming. But I think as well, your point about having good, workable, accepted standards, I think it's not exciting, but it really is important.
Thanks for that, John. Dave, what's your biggest takeaway?
Many, but I won't do that to you, Lysandra.
Thanks.
I actually felt what Nicole was saying, the insurers are the canary in the coal mine. And that is, we all know what's happening with insurers. And I actually think, based on what you're saying, Nicole, they will drive this. They have no other options to drive banking financial institutions to take action, or the end user. So I think that's what's going to happen, is they're going to do that. I think what you're saying is very true.
All right. Well, Dave, John, Nicole, thank you for your time today.
It's been really interesting, and it's been great to span the time zones, hasn't it?
And Nicole, I hope you have... Yep.
I was going to say, we're doing this on 2 different days, aren't we?
Yes.
Yeah.
Nicole's ahead of us, John.
Yeah.
She's ahead of us.
See, Australia's in the lead.
They're in the lead. Not only are they ahead on this whole taxonomy, but they're like 12
Literally
hours ahead of us. So
Yeah. Fantastic.
And Nicole, you're going to stay that way too, by the way. That's my understanding. That's how it's going to work. So
we just keep pushing forward.
Yeah. Thank you for your time too,
Thanks,
Nicole.
everyone.
Thank you, guys. It's been fantastic.
That's all for today's episode of the 360 on Energy and Carbon podcast. Thanks for listening. Make sure to check us out on our website at 360energy.net and follow us on LinkedIn at 360energy Inc. Tune in to our podcast on Apple Music, Spotify, Anchor, or other listening platforms by searching the 360 on Energy and Carbon. You can watch the video recording and subscribe on YouTube at 360 Energy Inc. Email us your feedback at podcast@360energy.net or comment on our LinkedIn posts. See you next week.